Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thanks for everyone tuning in.
Ted, are we near the top of a market for the stock markets, and are we going to see a repeat of what we saw last March, where we had a 30% dump?
Well, let's hope not. This is just 1 year after, basically, we hit the bottom, and the Fed came in with the fire brigade. Let's hope that we're not in for a repeat of that. I don't think we are. But what we are seeing is some signs, tentative, early signs of peak insider selling in the United States. And if that turns out to be the case, and we won't really know that for another week or two, it would indicate that there's likely been a medium-term top here in March. Medium term is, I'll leave it to others to decide to define that. But a meaningful top in the broad market cap indices, and we haven't got a huge conviction on that just yet because it's a very early indicator of this bottoming of insider activity. And why that's important is that we have found that when you have a significant bottom in insider activity, that meaning there's more selling than buying, so bottoming in insider buying basically tends to coincide with market tops. So we look at our U.S. Inc. indicator, for example. It's been trading or resting at multi-year lows, over 10-year lows, and it's really at a depressed level. We've seen five stocks with key insider selling for everyone with buying. It's pretty depressed. And now we're starting to see that turn up a bit, and you think, well, that's a good thing if insider buying's turning up. Well, except that usually happens near market tops when you've got sort of the stocks start coming down in price. Yes, then insider buying starts to pick up. Unfortunately, there's this big factor in the market called momentum, and once momentum starts going on the upside, it's hard to stop. And when it starts going on the downside, it's also hard to stop. And so insiders do pick up their buying when markets start to sell off, but that doesn't mean necessarily that we're near a bottom by any stretch. That usually takes some time to play out. So I think we're at this early stage of potentially calling for a market top here in the U.S. Interim market top, medium-term market top. We're going to monitor it. We'll do an update in our weekly U.S. report, which we put out on Wednesdays. It's available on insider tracking, IncResearch.com, and on some of our institutional clients. So let's keep an eye on that. Could we have had a March top? It's possible. It's possible that we've seen a March top here in the broad U.S. market. Now, the good news is that I still believe we have lots of opportunity at the stock level, and that's where the action is going to be, in our view. And that's where you really want to focus. I know it's kind of a cliche. You hear that, oh yeah, well, stock picking is important. Well, it really is. And you know what, though? That's really hard work. Making money via stock picking, it's very difficult. it's much easier when the QQQs just keep going up and you just buy the leveraged QQQ. And I'm not recommending that. Just lots of people did that in the past decade. And, it went up and up and up because the Fed printed and printed and printed, and there was no growth. And so you had this combination of low growth and huge Fed money printing. And, you just went for a sweet ride on these sort of bond proxy technology stocks. And what I mean by that is these are stocks that had growth far out into the future, and you'd be willing to pay a price for that. Just like bonds have dividends far out into the future and or interest payments. And in the past few decades, investors were paying more and more for those future coupons. Well, last decade, people paid more and more for future growth from future tech stocks, but that trade seems to be at a near end, if not an end. So we're in for some stock picking times. I think it's in exciting times for those who have a skill in that area. And it's going to be, though, a different situation than we had in last decade, where you could kind of play the ETF game and just try and find the hottest ETF and ride that for a few months or years, and you check your account statement every few months, and up it goes if you're in those U.S. tech stocks. But I think that game's over, and the whole sort of buy and hold mantra that the passive indexing industry has thrown at people, yes, that worked in the 1970s, but it's not going to work now, and now they're just spouting that off. It's in their own self-interest to keep promoting that mantra. People who do the buy and hold an index fund for the next 10 years, I think they're going to certainly underperform everyone else. You're going to underperform your neighbors who aren't doing that. But if you're a fund manager and you're using ETF strategies, robo strategies that pile into these ETFs, you're going to get crucified against your competition. So it's going to be a change. It's going to be a big shift in the investing environment, and it's all due to interest rates, Jim. They're changing. They're going up. And the big bond bull market we had since Paul Volcker took inflation by the horns and slayed it, that is done. We're into a brand new investing world, and it's a great world for stock pickers.
What's this going to do for all these armchair stockbrokers or stock traders who decided in the U.S. that I have a stimulus check, I live in mom and dad's basement, I don't have any real costs anyway, I'm going to just throw this money into the stock market? Are they going to do well?
Well, I think it'll come down to individual skill. Some of them will do well, and some of them will lose all their money. And that's, the way it is when you come into stock picking. It's a tough game. And they had a nice run as a group last fall, and in the summer, they had the monetary winds at their back, and sort of all boats were being lifted at the time. We're not in that environment anymore. So, yeah, if you pick the right stock, you'll do well. But interesting, on Canadian Insider, we have a daily briefing, and Lee Francis, who is a PhD candidate studying, basically looking at market sentiment with, particularly amongst young traders. She characterizes the current market environment as not a beginner's market, and I would agree with her, right? So it was fun in the summer, but it's going to be a lot tougher going forward here, and so it'll give the stock pickers a chance to shine.
We'll have more with Ted Dixon right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome back. We're speaking with Ted Dixon. Ted, you said interest rates are on the way up. Well, are all interest rates the same? Do you really have to pay attention to it?
That's right. Well, that's a really good point. All interest are not the same. But on business television, you'll hear these people come on and say, "Oh, well, interest rates are going up. That's bad for gold," or interest rates are going up. It's bad for resources. Well, that's a huge shortcut that doesn't really do anyone a service. We had another interview on it's a free interview on King Insider on our daily briefing that we cover from Real Vision on Tuesday on Monday, and Lynn Alden made the point that the yield curve is really two different asset classes. You have the short interest rates and your long interest rates. Now, I know at this point I'm at risk of putting all the listeners to sleep talking about interest rates, so I just want to stop and explain why that's critical, especially if you're investing in resources. It's super critical, okay? Because short-term interest rates are more important for commodities. They're important for gold. They're important for copper. They're important for zinc. They're important for all those things, okay? Long-term interest rates are not that important for those things. No matter what you hear on those business television stations and people who work for large Wall Street, Bay Street firms who come on and say they are, that is not correct in my opinion, okay? That is wrong, okay? Where long interest rates are important, though, are for mining companies and resource companies that have long life assets, okay? So while the short-term interest rates are important for the commodities, the longer-term interest rates are very important for commodity stocks, okay? And we've seen that play out this year over the past, 9 months, basically, where you had what we call real interest rates sort of, they bottomed out last summer, okay? Late last summer, like in August, okay? And that was important for mining stocks, because as these longer term real interest rates started to creep up, you started to get headwinds in some of the mining stocks, particularly gold. Okay. Why is that? Well, unlike sort of copper, gold is driven more by interest rate considerations than copper would be driven by both interest rate and economic considerations. So while copper faced the same interest rate headwinds as gold, they also had some economic tailwinds with the reopenings and the enthusiasm around that. So you had industrial miners being able to kind of take advantage of improved economic sentiment, whereas the gold sector didn't go anywhere and it lost ground. Well, that's because real interest rates were on the rise, okay, and the real economy, where there was more optimism around that. So you didn't really the investment case for gold was not as strong when you've got optimism around the economy. Look, it doesn't matter if you believe the optimism is misplaced, that everyone's an idiot who thinks the economy is going to grow again. That doesn't matter. Okay, what matters is what the consensus is thinking at the current time. If you want to look at why the prices moved the way they did, the consensus could be wrong. Okay, but there has been, up until recently, there's been optimism about the reopening. So gold is more or less a sideshow in that narrative. Okay. You may not agree with it, but that's my opinion why gold did not really do very well, and gold miners did not do very well, because not only did they have the real interest rates going up, they had this optimism around the economy, so more money went into sort of industrial miners and industrial stocks. So that's kind of a rear view mirror assessment of what went on. But where do we stand now? I mean, that's more important, and I think. We've had this big run in these pro-economy stocks, so we're seeing some money coming off the table, and we're also seeing real interest rates sort of rise. So the big question now is, I think, for the big industrial miners and industrial stocks and energy stocks, is, are these real interest rates going to keep going up, or have they plateaued? Right? And if so, that's fine. Then these stocks will be driven by economic growth when more confidence returns that yes, we're getting through these lockdowns, and yes, the story about the reopening is gonna happen. I think there's some reality checks going on with that right now, but hopefully that's a short term implication. So where are real interest rates going? I think that's critical for industrial miners, oil and gas. For gold, it's also critical. I think the one sort of short-term thing that I'd be looking at for gold is Bitcoin sort of being in this seasonal weak period of March. I don't know why that is. Adam Button over at Forex Live pointed this out, that March is a lousy month usually for Bitcoin. And maybe it's related to people paying their taxes with Bitcoin, like having made money and they have to sell some to pay their taxes. I don't know. But, for whatever reason, we're in a seasonally weak period for Bitcoin. That could help gold because, in my opinion, and people can disagree, gold, has struggled to compete with Bitcoin for some flows. If Bitcoin starts to weaken, that could be positive for gold in the short term. If we also get a top in the real interest rates, that could also be positive for gold. So, while it's been a kind of a lousy environment for gold for the past few months, could we see a change in that environment in the short term, in the medium term? Possibly. So I'll be keeping my eye out on that, and we'll be keeping our eyes out on that. And our Gold Top 20 report will be coming out by the end of the month, so we'll have some of the gold miners that make our list. But yeah, it'll be interesting if Bitcoin does kind of, it should be due for some sort of correction. It's had a huge run. It'll be interesting to see if people start giving gold a second look. And knowing the way the market behaves, I expect they probably will. We'll see. I could be wrong, but gold's kind of paid its dues here, and maybe now it's time for Bitcoin to pay its dues a bit.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, people have said for years, just hold on to everything. Don't sell. The long-term picture is the only one to have. Is there a time when maybe that just isn't good advice anymore?
Right. Well, and that sort of gets into sort of the education segment that I'd like to kind of leave with your listeners, and that is, as we talked at the beginning of the show, there was a period of time where just buy and hold worked like a charm. Okay, but there were a lot of factors involved with that, including, as I mentioned, the Paul Volcker killing inflation. That set off a multi-decade bond bull market, which was great for all assets. Trying to time that, there was no, in hindsight, there was not a lot of point in trying to time it. Yes, if you'd called the top in 2007, that was great. You could have made out like a bandit and then bought back again if you called the bottom in 2009. Sure. But in general, the buy and hold worked okay over that period. But now with interest rates being much more volatile and I believe heading on a long-term trajectory higher, that buy and hold mantra no longer holds. So if you just kind of blindly allocate money to the S&P 500 and the TSX Composite Index every month and these passive investment strategies, I will suggest that you're going to make the passive indexing company more wealthier than you will make yourself. Okay, so if you are not a active investor yourself, you probably want to look at a good active management mutual fund, ETF type. Well, I shouldn't say ETF, but. Or an investment advisor who's not just sticking his or her clients into passive ETFs and collecting the marketing fees and all that. So what we do at Inc., we do monitor stocks on a daily basis on our Inc. Edge rankings, and these are updated every day, and they take into account changes in valuation, changes in insider activity, and changes in price momentum. And we update that every day. And there's a video on our site that I made public. It's our morning report video from today, March 24th. And, it looks at a case where a stock, was in our top 30% of rankings just at the beginning of the month, and now, then it slipped to the bottom 30%. So, and it explains that, look, you do have to, in this market, now's the time to keep an eye on your signals, whether it's our signals or whatever you're looking at, whatever your metrics are, they can change quite quickly. So again, it gets back to this is a great period for stock pickers, and I'm going to suggest it's going to be a lousy period for passive armchair investors and that whole buy and hold mantra, and 5 years from now, you'll read about it in magazines saying, whatever happened to buy and hold is, buy and hold doesn't work anymore. Maybe at that point, it's time to go back to buy and hold. But, we're in for a big sea change, and it also, insiders react, right? If stocks get overpriced, they'll sell. If stocks get underpriced, they'll buy. So they can react quite quickly, and in this environment, we believe that insider signals are even more important, particularly in the United States, where in the last decade they were just kind of overwhelmed by this whole sort of Fed money printing and the environment where you just bought the big tech stocks and they kept going up. That game has changed, and it's a great opportunity for those who want to put their stock picking skills to work.
Ted, thank you so much for chatting with us.
Well, Jim, thanks for having me back. Really appreciate it.
My guest has been Ted Dixon, CEO and co-founder of inkresearch.ca, Canada's first online financial news and research service. His website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you could send them to info@howstreet.com. Our very popular YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.